From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 15th, 2018. Today, we're going to take a look at the AUDUSD, the Australian versus the US dollar for today's trade analysis. Starting on the daily time frame, two different trends we're looking at. The blue trend line, of course, clearly an uptrend. The black trend line, predominantly a downtrend, even though the past couple of weeks we have seen some bullish movement for the Australian dollar. It's predominantly been a downtrend here for this currency pair since capping out the highs up there towards the low 8100s, top of the black and the blue trend line. The yellow shaded area right in the middle of the chart is really what I want to focus in on. Look to the left hand side of the chart. You see the blue rectangle or box back here on the left hand side. You can see resistance, reversal to go down, resistance, reversal to go down. Sure, the left hand or the right hand side got a little bit above towards the orange zone, but for the most part the market found resistance at this yellow zone and turned around and went back down. Even in the uptrend along the blue trend line, you see the blue box where 1, 2, 3, 4 days found resistance in the uptrend at the same yellow shaded area. So very interesting, this yellow zone between 78.55 and 78.75. Then we go on into the future, and you can see right here where the black circle is, the market coming up underneath in 1, 2, 3, 4 days, finding resistance where the black circle is under the yellow zone, even spiking above it and then turning back down again. So we can see historically there have been multiple times consistent behavior, statistical fact, that this yellow shaded area has held as resistance for the Australian dollar. Now we bring it to the current past 4 days, and we can see the same thing. The market finding resistance underneath the 78.75 level, the yellow shaded area, for 4 days now. That's very interesting. Not only that, we take Fibonacci from the highest high, top of the black and the blue trend line, highest high, down to our most recent low that we see right here. Let me go ahead and put a black X there so you know where I'm talking about. Right there where the black X is. As it approached the 7,700 level, found support and bounced back up. So we take Fibonacci, highest high, to that low there. We find the 0.382 Fibonacci retracement level sitting at 78.74. Guess what? That's right there at the top of the yellow shaded area. So not only do we have historical fact of resistance here at the yellow zone, we see Fibonacci now sitting here at this yellow zone as well. So we know it becomes a retracement point. We know it becomes a potential resistance backed up by historical fact and Fibonacci. And we can see the past 3 days and now the fourth day finding resistance. 78.55, 78.75. So what do we do with this information? Well, there's potential opportunity here. Let's go ahead and zoom it in. The potential opportunity is looking for resistance and potential reversal for this to turn and go back down from this level. Obviously, it's had a very tough time breaking above it. So if it's not going to get above it, the potential is it turns around and goes back in the other direction. If it does, of course, the pink shaded area becomes your first potential target on the way back down. As it pressures back down in the direction of the previous trend, that becomes a potential opportunity for a target. The other target would be the green shaded area. If it breaks through the pink zone, we would look for it to head on back down there. So we know there's some potential if it breaks, and of course if it breaks the green zone, we're looking for much deeper. So we know there's potential if it does reverse. The risk, of course, is that it breaks above the yellow zone and goes higher. Interesting here, let's just take a quick trend line like this. We'll leave it the red color here. If we just take this red trend line right here, we can see that that also would put that red trend line closer to that pink shaded area. So if it comes down, we would expect support there based in that trend line. Also, a break of that would see it go lower. So some interesting things there. The first thing I would say about this yellow zone is don't buy it. Don't buy it underneath the yellow zone. That doesn't make a lot of sense because 4 days now finding resistance there. So don't buy under the yellow zone. Now, if it makes it back to the pink zone and finds support, that may be a different story. But right now, don't buy under the yellow zone. Potential to go short here. I like yesterday's candle, the smaller body with the longer wick on top, showing a sudden infusion of sellers coming back into the market from the 7,900 level. Sudden infusion of sellers giving us a clue that there are selling pressure. There is selling pressure here into this yellow zone and close to 7,900. So that gives us some opportunity. I would say that as long as it stays under the yellow zone, again, we don't want to go long, but maybe a potential intraday short 4-hour time frame. As we get down here, we saw the market get above the yellow zone, and now we're back underneath it. So what I'm looking for today is for the market to stay underneath the yellow shaded area. If it can stay under the yellow zone, and let's just make this look more bearish by making it red. If it can stay under the yellow zone, then we have this higher confidence that it will continue to go down towards the pink shaded area. We don't know what the current candle will look like by the end of it. Remember, this is a 4-hour time period. We don't know what it'll look like. But if it does stay underneath and we can see the market hold underneath 78.55, it will increase our confidence. Remember, that's what all we can do as individual traders is look for clues and evidence and indicators that increase our confidence in a particular direction. But it'll increase our confidence that it will continue to press down to the pink zone or lower if it breaks through there. But we need it to break underneath the yellow zone to stay underneath it. Not a false breakout. This right here, back here, by the way, we don't want this to happen, right? A spike underneath and reversal. So we need it to stay underneath to increase our confidence in the continuation lower for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.